Apple shares were marked about 5% lower in aftermarket trading this evening after the company reported a solid but not blowout set of fourth quarter results. The numbers from Apple actually were pretty good. Record iPhone sales and record iPad sales, but they just weren't good enough for investors. In fact, Apple sold 47.8 million iPhones. That's the new iPhone 5 in the fourth quarter. That's above some estimates, but not as many as some investors had hoped for. And the problem for Apple is that they've done so well in the past and they keep exceeding their expectations or the expectations of investors that it's really hard to keep up.
No one could have predicted this. Now, today,
perhaps reflecting that, Mr. Cook, Apple's CEO, actually warned Wall Street that the numbers for the current quarter might be somewhat below what some of them had been hoping for, and that almost certainly is another reason why the shares this evening were marked lower. Apple shares have actually been under pressure for some time, partly because some reports have suggested that Apple has lowered the number of components that it purchases to make iPhones and other devices. Now, that's interpreted by some investors as an indication that iPhone sales may have peaked and that the future may not be quite as bright as the past. Now, there could, of course, be another explanation for why Apple may be reducing the purchases of some components, and that is that the company could be preparing to introduce new models to the iPhone family. In particular, there are some reports and a lot of speculation that Apple may be preparing to introduce a smaller, lower cost iPhone, which would compete more effectively in markets like China, where Android-based devices have made big gains. Paul Taylor from the Financial Times reporting in New York.